Alright, let's now take a look at the second method. In Chapter 17, we're going to be looking now at the first in, first out method, or the FIFO method. What we saw just prior to this video was the weighted average process costing method. And when we looked at that weighted average process costing method, we saw that basically the beginning balance of any work in process that we had that was basically brought in to the current period is literally blended in or averaged in with any current cost and current production amounts that we produce in the current period. So this calculation for our average cost per unit is definitely different than what is going to be done with our FIFO method. That weighted average process costing method calculated the equivalent unit cost of all the work done up to the date of the basically end of the month and journal entries and closing of the books and the income statement, the balance sheet, etc. And that weighted average process costing method calculated that equivalent unit cost of all of those units that were worked on to date, regardless of the accounting period in which the work was done. And we then would assign that cost to the equivalent units completed and transferred out of the process, and also to the equivalent units in ending work in process. Now what we're going to see is that the FIFO computations are very distinctive because what they do is they assign the cost of the previous accounting period's equivalent units in the beginning work in process inventory to the first units that are completed and transferred out of the process. And then we assign the cost of equivalent units worked on during the current period first to complete beginning inventory, next to started and to complete new units, and then finally to units in ending work in process inventory. So therefore, in contrast, the weighted average method costs units completed and transferred out and in working process at the same average cost, but this FIFO is going to give us a more detailed view, and if we really pay attention to our reports, we will be able to see the changes over time in our cost per units, and we can then of course basically look at those like variances and analyze what's going on, and possibly work on issues as far as pricing and efficiency and things like that. So let's take a look at our FIFO method. Again, it does assign the cost of the previous accounting period's equivalent units in beginning work in process inventory to the first units completed. Okay, so if you just imagine this, if you will, whatever was partially completed and left over in work in process at the end of the prior period, certainly you would think that the manufacturing plant would finish those first. So first in, first out. We'll then go about assigning cost on to the items that were worked on during the current period. So the ones that we start, okay, the new ones that we start in this period are going to get cost assigned to them first, and then we'll finish up with assigning cost to whatever's left in ending work in process. And we're going to see that we're keeping these costs separate, and you're going to see that the form changes. So again, if you've printed out the 2 pages of the Excel spreadsheets that I loaded for Chapter 17, you'll see that the FIFO form is definitely different from the weighted average form. Alright, so let's take a look. We will still use the 5 steps, okay? So step 1, we still have to figure out what our flow is and make sure we've got the number of units and that our math all works out. So first, let's take a look at our work in process beginning. Again, we're going to be using 225 units that were left over from the prior period. And then we start some new ones, 275 more were started during the current period. So 225 plus 275 gives us the total of 500 that we have got to account for. We then need to go down and plot out our three distinct areas. First, we've got to break out those first in, first out units. So the units that are still in work in process at the close of the prior period need to be plotted out on here. So again, we've got those 225 units. Now you'll notice that we are subtracting the percentage of direct materials here because the direct materials were put into place in the prior period. All right, so under this first in, first out method, we have got to separate out the fact that the materials are from the prior period, and you'll see why we do that when we get down to steps 3, 4, and 5. All right, so notice that it says 100% minus 100%. All right, so all of the direct materials were put into play in the prior period, all 100% of them. Therefore, 225 units at 0 for direct materials in this period goes here. As in, these prior period units got their direct materials in a prior period, not in this period. So that's why there's a 0 there. In regards to conversion cost, we have got 100% minus 60% there, okay? They were at 60% conversion at the end of the prior period, all right? So 225 units are getting worked on the rest of the way. So 100% minus 60% means that they had to be converted 40%. Therefore, they are going to get equivalent units 225 times 0.4. So 225 times 0.4 gives us 90. And basically, that is telling us that for the amount of work put in there, that we're going to assign so much in conversion cost this period to those that were brought over from the prior period. All right, next, we have got 175 more units that were started and completed. Now, where are these two numbers coming from, 225 and 175? If you'll recall, in our last scenario, that we had 400 units that were completed and transferred out. So that 400 units is made up of, first in, first out, the 225 units from the prior period. 400 minus 225 means 175 had to have been started in this period and completed. All right? So we know that based on the fact that we're using that assumption that our direct materials are put into play in this period, then 175 units times 100% of their direct materials will make us have 175 here for our direct materials. In regards to completion, they were started in this period, they were also completed in this period. So 175 units at 100% for conversion means 175 equivalent units as to conversion cost. 500 to account for, minus 225 from beginning, minus 175 from started and completed this period, leaves us with an ending of 100 units still in work in process. And based on our scenario, they're only 50% complete. So 100 units, they were also started this period. Therefore, they've got 100% of their direct materials. So 100 times 100% equals 100 equivalent units as to direct materials. But they were only finished 50% of the way. So 100 units times 50% converted means equivalent units of 50. All right, so here's one of our check figures. 225 from beginning WIP, 175 started and completed, and 100 left in work in process do in fact add up to 500 units. Therefore, we have accounted for all of them. Now we can go and sum up our equivalent units columns, and we'll end up taking these numbers and moving them down to steps 3, 4, and 5. All right, so 0 plus 175 plus 100 equals 275. 90 plus 175 plus 50 equals 315. And we've got to use the 275 and the 315 when we go about breaking down our cost. All right. Now, in regards to step 3, we're going to be paying special attention to the costs that were brought over from the prior period under this method. So let's first take a look at how those numbers get filled in. We do have the work in process beginning, 26,100, which is made up of our direct materials at 18,000 and the conversion cost of 8,100 that we've already seen this. Then the cost in this current period, 19,800 and 16,380 for a total of 36,180. Summing those up, we've got our total cost to account for. We can check those figures later to make sure we divvy up everything. And these are your check figures. If you get down here to the bottom and these numbers do not match these numbers, you have done something incorrectly. Alright, so for our cost on step 4, again, we've got this first in, first out issue, and we are going to separate these out. Alright, so first in, first out costs are going to go to the first goods completed and transferred, and then we're going to take the rest of the cost and put it to the next set of units that were completed and transferred out, and then lastly to the units still in work in process. So notice that this line right here says cost added in current period. It is not the total cost. It is only for this current period. We need to use the equivalent units from step 2, taking 19,800 and dividing it by 275, and taking 16,380 and dividing it by 315 in order to have the cost per equivalent units, and using that down here. In regards to the assignment of cost, we completed and transferred out 400 units total. The first 225 of those 400 came from beginning work in process that needed some more conversion. Therefore, we have got the total cost that was brought over. The original 18,000 in direct materials, because they had already gotten their direct materials in the prior period, and the 8,100 for the 60% conversion that they had been converted in the prior period. And now we need to take those equivalent units that we saw in step 2 for those beginning work in process units and apply those equivalent units times the cost per equivalent unit of work. Therefore, think back, these 225 units had gotten their direct materials in the prior period. That is why they had 0 equivalent units as to direct materials. Therefore, 0 times 72 is 0. And then those 225 units, they had been converted 60% of the way in the prior period. Therefore, they had to be converted the remaining 40%. And that remaining 40% gave us equivalent units of 90. So 90, which was 225 times 0.4, times our equivalent unit of work done, cost per unit of 52, gives us $4,680. So 0 would be here, 4,680 would be here. Therefore, the total amount assigned to those would be 26,100 plus 4,680. Therefore, 30,780 is being assigned to those 225 units that were from beginning inventory that were converted the rest of the way. Next, we take those 175 units that were started and completed in this same period, using their equivalent units. Remember, it's started and completed, so they got 100% of their direct materials and 100% converted, and that's why this is 175 equivalent units on both of these, times the 72 per unit and times the 52 per unit. Adding those two up, you could calculate and fill in this box and calculate and fill in this box, adding them to equal 21,700. Therefore, what is the total amount of units that were completed and transferred out? 52,480 under the FIFO method. Okay? Which it would be different if we were doing weighted. Next, we've got the work in process ending. We've still got 100 units left. 100 units that got all of their direct materials put into the process. Therefore, 100 add 100% equals 100 units, equivalent units, times the 72 would give us 7,200. And then we have got the fact that they were only 50% converted. 100 units times 0.5 gives us 50 equivalent units, to give us another $2,600. So if we were to add those two boxes up, we would have 7,200 plus 2,600 equals 9,800. This work in process ending would be our work in process asset value on our balance sheet, and these other ones will either go to another work in process account or to finished goods inventory. Alright, so if we were to then total up our total cost to account for, which is 52,480 plus that last 9,800, we have accounted for 62,280. You could also tabulate up this column and tabulate up that column, 24,480 and 37,800, and make sure that this number plus this number also equals that. And then compare it up here to the top, 62,280. Therefore, we all match. Everything has been tallied up and put to where it needs to go. And that is the FIFO method from Chapter 17. the FIFO method is definitely an advantage to managers due to the fact that they can judge the performance in the current period independently from the performance in the preceding period. So we can see a little bit more if we use that one. In a period of rising prices, the weighted average method will decrease taxes because cost of goods sold will be higher and operating income would be lower. Now, we do have some other issues regarding transferred in cost, and it would just get a little bit more elaborate with our documentation. So transferred in cost are typically costs that are coming in from a previous department. So these costs have been incurred in a previous department that have been charged on to a subsequent department. These costs may be costs incurred at the previous department during this accounting period or even a preceding accounting period. Sometimes they get called previous department cost. Again, we're mirroring the production process with our journal entries. So we're trying to make our financial statements match what's actually going on in our production departments or within our manufacturing facility. Our transferred in cost would have a line item as well. So notice we've got work in process beginning, we've got transferred in during the current period, and then we would have to go and divvy up a third column for our transferred in cost, also calculating their share into equivalent units. And you guys can basically look at this one the same exact way as you've seen the other in regards to how those columns get multiplied times a percentage and placed where they need to go. Okay, so notice we have the work in process beginning and we have our cost added in the current period. We would then be able to calculate out our cost per equivalent unit of work done based on our equivalent units for transferred in, direct materials, and conversion. And then we would apply those on here, noticing that in the direct materials for the work in process ending, we have got 0 there due to the fact that direct materials were placed in service in a separate time frame. Alright, so if you happen to work somewhere and you do have transferred in costs, do not forget to make sure those get put into your cost sheets. Okay, so you've got to make sure those get covered, otherwise you're going to have some major accounting problems when it comes to your income statement and your balance sheet. If you've got to calculate these transferred costs using the FIFO method, do not overlook costs that were in beginning work in process, which may now be part of the units transferred. I don't believe you guys are going to see one on your homework. I would have to double check that. And when we transfer them on to another one, we are going to have one average unit cost when those get moved out. Ooh, one other special point that this number 5 highlights. Think of the fact that we may have one department that is putting something into our process or our product, and they may be putting things in and measuring things based on, for example, pounds or feet besides number of units. Therefore, when you start moving these things from one processing department to another, you may also have to do some additional calculations in order to port that over or be able to use that data in the current processing department's forms. So be careful. And I will stop right there.